Hey everyone, welcome back to the channel. It's April the 16th and we're looking at some of the biggest stories in crypto, what's happening across the market, and some key on-chain signals to keep your eyes on. We'll start with the market today. As we can see, the market cap still sitting around that 2.7 trillion, which it was yesterday. We're at 82 billion in volume, which is down slightly. BTC still sitting around the 60-61% dominant range. If we look at Bitcoin, Bitcoin's around 83,000. Ethereum's at nearly 1,600. There's a bit of red over the last hour and over the last 24 hours as we go down the top 100 here. Hedera's down 6%. What else we got? Hyperliquid's sort of having a little bit of a pullback, but it's had such a big week, so that's not really to be unexpected. Pi Network, where's that going to land? 7.5% down. What else are we looking at in here? Not a lot. It's really just a sea of red. I mean, obviously we've had some reasonable runs for the week. You look at artificial superintelligence, you look at Sonic, you look at Algorand, you look at Render, Casper, Potenza 18%, great as well for the week. So we're definitely starting to see a little bit of rebound in the market. Okay, let's have a look at the gainers and losers. Mantra's having that bounce back. It'll be interesting to keep an eye on that, just to see does it make a recovery, or is it just having a bit of a bounce for the moment and then gonna pull back again. Maneki, if we remember yesterday, that was one of the memes that was down yesterday, so it's pulling back again. We often see this, right? Where one day things are down, they bounce back the next day. Still such a volatile market. Brett's down today, was up yesterday. Let's have a look at the crypto bubbles. See what's happening in here. A lot of red. A lot of red's what's happening in here. Buy pulling back. Near, that was one of the ones that was down yesterday. It's sort of coming back a bit. Not a lot, obviously. 4%. It's not a massive move for the crypto space, but yeah, just a lot of red we're seeing today. Whiff down, Brett down. It really will be interesting to see what happens with these memes. Like, are they going to be a narrative that's going to bounce back as we move through this year? Is it going to be more the AI plays? Is it going to be more gaming, layer ones? Everything will have its turn. Like, it's going to be really interesting just to see how this plays out, because this run hasn't really been what people expect at the moment. It's definitely different to the 2021 cycle. So, often you're buying early enough, everything will have its turn. And it's remembering to take those profits at the time, not to obviously invest more than you can afford. I know a lot of people were locked in really thinking it was going to just play out like all the other cycles. But, if crypto was that easy, everyone would still be here. And as we know, they're not. So it's really a matter of, doing your research, having your convictions, keeping your finger on the pulse, looking every day, even when it's down, just keeping an eye on what's happening in the markets. Doesn't have to be every day, like it's really good to, and I did it. You just go and touch some grass, have a break for a bit, come back rejuvenated. There's not a lot, depending on what stage of the cycle, if I'm not a trader, so it doesn't really impact me as much to be every day watching charts, things like that. I'm more about the narrative. I'm more about the bigger picture. I'm more about the key indicators, doing research, Did a lot of research, obviously, through the bear when I was building my portfolio. That's the sort of stuff. So I'm less buying now. It's more just holding my portfolio, making strategic plays where I think it's necessary. I'm doing some DCAing, but I'm not DCAing into new things. I'm really DCAing into the ones that I have conviction in, the ones that I'm comfortable putting a bit extra in, because I really see this as a great opportunity at the moment to be stacking your bags on real conviction plays. And that's not the meme coins. As I said, I hold some meme coins. They're a small percentage of my portfolio, but now's not the time that I'm stacking meme coins. There's so many great opportunities out there at the moment in quality utility plays that I'd be mad not to. Some of them I'm in profit anyway, so I'm not bringing down my average, but they're just such good opportunities. Some of them I am bringing down my average, so it's really the time to be consolidating and looking at those sorts of things for me personally. Everyone does what they want, obviously. If we have a look at the coin market cap fear and greed index, we can see we're 29, so we've come down a little bit, which wouldn't be unusual looking at the red that's in the market today. So it's come back a little bit. Yesterday we we're at 31. I mean, a week ago we we're at extreme fear based on this fear and greed index at 15, and a month ago we were still lower than where we are now. So sort of playing out. Still a good, in my opinion, still a good opportunity for those high conviction plays that you might have. Okay, I won't go into the major chain indicators today. I looked at them earlier this morning when I made my post on X. So follow Crypto Domain X on X, and daily I post on there all the key indicators that I look at. So they're not going to move massively at the moment, some of them. So I won't go into too much detail on those today. We'll take a look at the news stories. First one today is the man facing 6 years in prison after omitting $12 million in CryptoPunk NFT sales from tax filing. People, pay your taxes. Like, you will get tracked, you will get caught eventually. There's so many great software, so much great software out there that you can use now, that'll track your wallets. I use Coinly here in Australia. You put your wallets in there, it tracks all your transactions. I then go through all my transactions, make sure that they look right, call out anything that's dust or whatever to clean that out, and pretty much done. It's not a hard thing to do. Definitely worth making sure that you do your taxes. Trump considered banning congressional insider trading. He's calling on a ban on insider trading among members of Congress after years of public frustration with ethically questionable trades. Like, honestly, I can't believe that Congress is actually able to do insider trading at this point. And I can't believe anyone will complain about them not being able to do it. They're saying they got bipartisan support. I'm assuming maybe not from the ones that are doing it. But, that's something that should be a no-brainer, realistically. Speaking of memes earlier, fart coin. It's just runs rings around Doge, Shiba Inu, rallies 57% in 7 days. It's, let's see how it plays out over the long haul. Every one of these meme coins seems to have a turn at one time or another. The ones that stay around are Dogecoin and Shiba Inu. They're the ones that hold their ground. They're really the Doge father of the meme space. So, they're the ones I'd be looking at. US government might use their tariffs to buy Bitcoin, part of the Bitcoin strategic reserve. Remember Trump saying that they wouldn't be using taxpayer money to buy Bitcoin. They're going to hold what they currently had. So I know they're looking at a bunch of different ways that they can potentially add to the Bitcoin reserve. This is obviously one of the proposals that will be put forward. There's a number of them that they're still looking at from what I've read. This is just one. Google to enforce MiCA rules for crypto ads in Europe. This one's quite interesting, right? Because there's so many scammy cryptos out there. I know, hard to believe, right? But there's so many out there that can advertise anywhere at the moment, and there's no stopping them. So obviously, Google's saying unless you're part of the markets in crypto assets, which is the MiCA framework, you will not be able to advertise, which is part of Europe's framework. So I think it's good. I think it's good for the industry. I think it's good for investors and for the retail investor out there. Anything that's going to minimize the scams that are out there. And look, let's be honest. Everything's a scam until proven otherwise. The amount I've learned, and I've been lucky enough not to be scammed in crypto, just purely through research, hearing things, watching, not connecting things to anything, using different computers for my wallets, things like that, cold storage, all those different things that people tell you to do, you need to do. The first thing people should do, probably even before getting a crypto wallet or buying crypto, is research as much as they can about scams. Of course, there are so many, and like professionals get caught by them. Some of the biggest influencers have been caught by them. So anything they can do to minimize that in the space, I think is a good thing and well worthwhile for the retail investor and the industry. Look, overall, the market feels like it's warming up again. Some of the altcoins are showing strength. Meme energy is coming back in some spaces, I guess. It's back on the radar at least, but we're not seeing full-on euphoria yet, and we may not for a while. As always, it's good to zoom out, stay level-headed, watch the data, not just the hype. That's it for today's Crypto Rundown. If you got value from the video, make sure you like, subscribe, and share it with others in the space. I'll see you tomorrow here on the Crypto Domain. And remember, crypto's an adventure. Get into it.